Good afternoon, traders. Welcome to another MK trading video. Today, we're going to talk about Fibonacci. So I received a request today to get into more detail about how I draw my Fibonacci's. So I wanted to go ahead and take the time after the market to show you guys how I do that. So we're going to go ahead and use TradingView today. And I want to show you guys that you have these tools accessible to you on TradingView here. You have the retracement. You have the trend-based Fib extension, and of course the Fib time zone, and other, including advanced ones. These are accessible to you on pretty much 99% of trading platforms. If not, I would be kind of upset. But anyway, we're going to grab the swing high from the March 5th action into the swing low from August 5th, and we're going to look at what price levels we get. So you're going to notice that a lot appears. You're going to want to go ahead and open up your Fibonacci settings, and you can unclick all of these extensions that end up just coming out of literally the cycle repeating itself. And you can do that by just double clicking on the actual Fibonacci lines, or you can just right click on the lines and click settings. And if you guys are using TradingView and you want more TradingView tips and tricks, I have quite a few, and I would not mind going over those. But that's for another time. Let's focus on these Fib extensions, or retracements rather. So you can see here we have a level of confluence. We respected this line. We ended up going higher and got rejected. And by the way, take note of if I double click my Fibonacci line and I go ahead and show us that 23.6, or I'm sorry, the 78.6, if I'm not mistaken, you'll see there that there is a clear resistance that occurred twice so far since that first time that we retested it. And we actually retested it at the end of September, I'm sorry, which was our most recent swing high. So if you're a wow, I can't speak. If you're a Elliott Wave Fibonacci analyst, this is something that you watch pretty regularly, and it might be how you trade. And I know quite a few Elliott Wave traders that prefer NG because of how much it respects those levels that you're seeing me retrace. And what's important is to understand that, when we hit that swing low from August 5th, the way that we saw rejection at this key level that we're trading at right now, it's showing obvious confluence, but we don't have a Fib there quite yet. Now, there is a 23.6 trend-based extension here, but I want you to take note of something, okay? Between August 5th and the beginning of September, you basically had the opportunity to take a counter trend long, even though the trend was down. That's why we call it counter trend, to an area of confluence. And again, we can basically reiterate that this is indeed an area of confluence by seeing how the price has reacted recently. By, once it's broken through that level, we broke through several levels until finally reaching the resistance that we had back in early June. And now we're headed back down, making retracements as expected. Not necessarily perfect, but that's due to the fact that we are looking at a daily chart. Now, if I open up and show you what a 15-minute or a 39-minute looks like, you're going to notice that we can set up more levels of confluence that are more accurate. So let's go ahead and take a second to look at the, what's it called? The initial, whoop, I don't know why I did that there. Sorry, guys, I'm getting a little flustered here. My computer was doing funky things there. Okay, back to this. I'm going to show you guys how to draw your extension is what I was getting at. So your extension is going to be the tool used for future price projection. And again, I just want to reiterate, notice that the resistance over the last swing low has been consistently trending lower. So we're going to go ahead and grab the second trend lower because the actual second one was just a repeat. So we want the new resistance that you saw me drag there down to the same low. And now you see that we have confluence, right? There's that 38.2 confluence that we were just talking about as a key level of price action. And that's what I meant by saying that when we hit that low down like just above $2, we could have ran it to that level of confluence on a counter trend long during that whole month to potentially make a positive trade. And you can see that if I just take that level of confluence and I copy it, and by the way, traders, if you're a TradingView user, go ahead and press Control when you drag any sort of tool, and it will multiply the tool, and that will make your life a lot easier. So now I've got these really accurate levels of confluence that are respecting Fibonacci levels and respecting the basically development of time that Fibonacci represents. So you can see that the 23.6 is now acting as a support, and it once acted as a resistance, right? So our next goal here is to basically retest that level. And if we go over here to the 39-minute chart, which is one of my favorites, you can see that over the last intraday sessions, it's been a very great consistent pattern of retracements. Now, you'll notice that there's sort of this gap here, right? And that gap represents confluence over here, and it extends all the way out to the current day and the current supports that we've seen. And how do we be sure, right? Or how can we be sure? So go ahead and take your Fibonacci tool again and basically redraw the trend that you are currently in, because Fibonacci is all about just seeing the trend in a clear fashion. I'll be brief about it again. Fibonacci comes from a trader who basically came up with this idea, but this mathematical sequence in order to identify a cleaner price projection. Because if you know the sequence, you know it goes 1, 2, 2 plus 1 is 3, 3 plus 2 is 5, etc., etc. So notice here we have confluence, right? Here we have confluence again at the Fibonacci retracements, the 23.6 to be exact at this moment. Once again, confluence, so on and so forth. You can really take the time to understand where traders are seeing value, where they're seeing confluence, and whether it's a fundamental catalyst or a completely technical driven move. The more you watch these markets, the more you'll understand who's respecting these lines, and how people react within them is also going to give you a huge edge in this market. So we'll go ahead and get rid of these highlights and touch on the fact that the one-day chart is going to give us that trend-based extension that somehow I skipped again. And I'm going to go ahead and clean this up a little bit. And guys, you can go down there and click that little stack of paper that you see at the bottom left corner, and that'll allow you to access all the objects and basically decide which ones you want to see, which ones you don't want to see. And that way you can clean up your chart and really pay attention to what matters to you. Everybody's going to have a preference. So I'm just going to point out that the 38.2 retrace, the 618, the 782, and the 50% are typically the most used. So you can see those are on my chart right now. And I know that some of you may have heard of the 618 golden ratio, and that is a whole nother video in and of itself. So we're going to go ahead and focus on drawing this fib extension. Go to your tools and get your trend-based fib extension. You're going to grab the low that we had originally, and basically it's 3 touches this time. We're going to pin the high of the most recent swing down to the retrace of the most recent 50%, because that is where we saw support. And now you'll notice that that the price itself is going to show a projection in the future that has not occurred yet. And hang on, guys, I'm struggling here to get this thing to work properly. And also, I want to reiterate, you guys, that Fibonacci is still a subjective tool. And even though it is a mathematical sequence and it does respect levels quite well, it should not necessarily be like, you don't think that it's just going to work every single time, right? I mean, there's definitely some nuances to it, and you can see that in the wicks and the candles. But overall, the respect is there. And you'll notice that instead of drawing the 50% support, I went ahead and drew the confluence just below. And the reason I did that was because I'm overall bearish on NG right now, and I want to get the most recent trend projection. And you can see here that it's projecting that the 1612 retrace is going to essentially make a higher low than the previous from August. And that to me is a very rational thing to occur, considering that the energy market is still sort of in a oversupplied glut, if you will. And that said, I'm still going to be bearish, and I'm not really looking to get a bullish sentiment just yet based on all the other variables. However, just for educational purposes, I will show you guys how to draw the bullish sentiment if you are indeed bullish on an asset. And the only difference here, guys, is that you have to respect a retracement, okay? It is normally suggested that you look for the 38.2 to 23.6 retracements like you see here, where we grabbed the 38.2, bounced off the 23.6 and went back to the 38.2. We can do the same thing, but basically project the bullish continuation. And the way that we're going to do that is by just going ahead and let's get rid of, or actually, I'm going to go ahead and add all of these for you guys so you can really see how the extension is projecting overall and how it's respecting levels of previous price action very accurately, which is another way that you can confirm that you did it correctly. And this is a very clean Elliott wave. Wow, that was redundant. It's a clean wave as well that aligns from that swing high in early September down to the swing low that we just got. So let's go ahead and clean this up again. Sorry guys, this video is a little sporadic because I'm in a rush, but that's okay. I hope this is making sense to you. And if not, please feel free to send me a DM with any questions or ask some of the peers in the group. So we're going to go ahead and make that bullish continuation trend that I was talking about. Actually, let's go ahead and do the time zones because this will kind of wrap it up and make a little more sense. And I don't want to overwhelm you guys. So just focus on what the downward trend is right now, because that's the most realistic, especially considering that we made a lower high. So unless we make a higher low or a higher high from that previous rejection at the 50% retracement, I'm not really going to be interested in even showing you guys that, because I don't think it's good for you guys to even look at right now. But again, it all stands the same. You want to retrace the respected bounces off of those levels. So what I just did there is you'll notice that I dragged another line from the low of August 5th. And this time, instead of hitting the high, I hit just below. And the reason that is because this is a retracement into that 618. And that's typically how you want to respect a time zone. You want to draw it where the 618 meets the original swing, or from the original swing low. And what I'm trying to show you here is that the price is expected to hit resistance in a horizontal fashion from here on out. So you can see that in the coming months, in November, we're supposed to see rejection here. We're supposed to see rejection here in 2020, so on and so forth. Now, there's no exact way to tell, but this is just a rough draft so that you guys can really kind of get an idea of where resistance might happen. Especially you can see that there's a 618 retrace there. We've been rejected there before. There is a probability that we'd get rejected there again. So I want to show you guys the bullish extension real quick. Even though I said I wasn't going to, I figured that I will just for educational purposes. Here you have the 50, the 78.6, the 1618, so on and so forth. And again, guys, it's literally just like inverting the entire process and just showing that these are the levels of confluence based on the symmetry, based on the swing low, swing high, obviously based on the Fibonacci formula. But the more that you keep track of these trends, the more that you'll see that your most basic technical analysis, once you've defined that particular trend, the more that you add to it with these tools and with these really helpful mechanisms, you'll find that things work out a little bit more effectively for you and a little bit more accurately. And that's all, again, just based on my experience. So I'm going to go ahead and open up Snapchat because this is a clean chart. It has nothing on it. We don't know much about it right now. And I can show you how you can basically get a nice idea of where value lies and where confluence lies. So we're going to grab the swing low from the December dump. We're going to go ahead and retrace that high, get our 50, our 23.6, our 78.6, our 38.2, because those are the levels that we like the most. We can see that Snapchat has a pretty clean retracement continuation. And now what we're going to want to look for is those levels of confluence that we keep identifying. And remember, guys, in that gold video that I did a couple weeks ago, I reminded you that you want to do this off of every swing low so that you can see levels of confluence more clearly and for your practice. So now the double Fibonacci retracement has given us these clean levels of confluence where clearly price is respecting the levels and the time scales, which we'll draw out. Well, we won't draw out this time, but you'll see here that these are clearly congested levels. We're going to go ahead and kind of highlight them with our ellipsis tool and then totally botch it again on that control drag. Let's try this again. Come on. I don't understand why this is so difficult for me these days. I'll just clone it. And again, you can right click and clone it if you're having trouble with the control drag. But you can see we made a higher low, and we are making that higher low in this area of confluence. Of course, we had earnings today, so you can see that big candle kind of driving the craziness. I'm just going to make this a little bit prettier and cleaner and make sure that we can still point out that that is indeed a level of respect and confluence. So now I'm going to draw the extension off of this prior swing low where the confluence occurs. And now you can see that our projected price range to the upside is going to be these $19. And again, you want to make sure that all of your other technical analysis and your tools align with these levels. So my recommendation to you is just start out by drawing the confluence with the multiple Fib extensions and keeping track of where you see retracements and triple tops, double tops, areas that get visited very regularly, and how they retrace on those Fibonacci's that you've drawn. And over time, you'll develop charts that you're keeping an eye on and that you have your levels set. You'll notice more and more that the reaction within those levels is very important to your day trading and, of course, any investments that you're making. So I'm just going to turn all this on so you can see the effectiveness to the fullest. It might look a little overwhelming, but it can be useful if you can sort of break it down and find where those levels of confluence matter to you and where you're going to use them in the future. So again, I don't know why I have or am having so many problems getting these sorted out, and that should be good. All right, so you can see there's a frick ton of levels. We don't need to get into that too deeply, but the point is as time goes on, you'll have these levels. You will see them get respected and rejected and used as support and et cetera, and you will be able to develop a more effective, concise, and precise, in my opinion, way of support and resistance. Because remember, guys, support and resistance is not just like one level or one price. It's a zone, and the zone of confluence is going to identify your initial projected price movement based on that arithmetic that you've set up. And I'm just doing this here to show you guys that these levels of confluences are likely to imply a time resistance in the future closer to where I just drew. So if we go ahead and we take that time zone, remember we drag it from the low to the high, just like we did the retracement. And here you can see, oh, look at that. We have a retracement or a resistance of the retracement that's expected sometime in February, at the end of February. So I'm going to leave that there, and we will touch base on that in a couple months and see if it worked out the way that we had drawn on a very quick sort of on-the-go Fibonacci analysis. So I guess I'll go ahead and do one more for you guys just for good measure. Let's go ahead and check out crude oil. 1 second, I'm going to get rid of all this stuff. By the way, everybody, speaking of crude oil, we will be going live tomorrow for the crude oil report, and we're going to touch on how we set up the Fibonacci's for the most recent swings and how we think they're going to correlate back to the fundamentals. And so that should be a great tool for everyone as well to kind of take these technicals and mix them with fundamentals, because that is obviously my favorite thing to do. So, okay, let's go to crude oil here. Oh, okay, I guess we're doing Colgate. Well, sorry guys, I don't have time. I'm going to go ahead and just do the toothpaste company because it's the same thing when we're talking about the education I'm teaching you. So you see that time around, I went ahead and extended just from that most recent major swing high or swing high to swing low. And the reason is because I want to show you that this is effective in the trend that you choose. If you're trading like a monthly basis, then this might be the way to draw your fibs. If you're trading on a daily basis, then you might want to try drawing the 39-minute, 45-minute. If you're trading like months down the line and you're investing, then you want to go ahead and do the daily chart. Start with the daily chart anyway, though, if you're a beginner, because you do need to understand those 618s and those 50% on the daily and how they correlate back to when you see them in the intraday. Great example is that 1,516 level on gold. We revisit that level quite often. So hope you guys enjoyed that video, and we will chat soon. All right. Take it easy, guys, and see you in the morning.